You should have an option record meet. Yeah, now it's getting recorded. Thank you.
Oh, my bad, my bad. So do you want me to go over and repeat what we just discussed?
I think a quick overview of what you're going to capture, that would be good.
Okay, fantastic. Yeah, sure, sure. So as I earlier said, we are going to keep this session very short. I don't want to throw away a lot of theory around you guys. It's Sunday afternoon and it will be really boring. So we are just going to discuss 5-6 points. We'll touch base to the basics of technical analysis, different type of charts, the importance of structures, support and resistance, moving averages, and followed by demand and supply. And then I don't have to explain importance of psychology for any trader here, right? We are going to get into charts whenever it is required of. If we are discussing a specific point and I think or you feel that you are not able to understand the concept, hey, let's go and see the chart, we will do that. Okay. So as I said, technical analysis is nothing but a study of demand and supply, which basically creates a price action. And when we talk about demand and supply, it's not about demand and supply of people like us. No offense, mean there could be very big HNIs here, but demand and supply is usually are usually created by big traders, institutional desks, and FIs. Okay, so they always have their buying levels and they always have their selling levels. Regardless of the price action, they never deter from their buying and selling prices. So essentially, trading is charting is nothing but a footprint of these big traders, right? So they tend to create demand and supply, which further leads into a price action. So that is what we are going to see from a chart. Based on a historical price action and demand and supply and a structure of a chart, we are going to attempt to predict what is the future price action that would be. Okay. So in a simple language, this is what a technical analysis is, right? So you must be already knowing what are the different type of charts are. These are the primary three charts that I personally use, rather two of them. Candlestick is one of the very common charts you must have already seen in all my chart or candlestick charts. Open, high, low, close. Some traders use this to identify stocks which are open high or which are open low, just to trade intraday. But I personally don't do this. But this is a one of the most common charts. And third is the Renko, which I primarily use for event-based trades. For example, like election results are there, Brexit was there, budget is around. So basically, this you follow to understand what you basically eliminate the noise and you remove the time frame from the chart and you just look at from an absolute perspective. So that Renko is actually designed for that. So we'll not get into much detail about these charts. We are going to stick around to the candlestick for this session today. Perhaps in the next sessions we'll discuss more about these two different type of charts. So these are the three different type of charts, and in this session we are going to focus on candlesticks only, right? So this is the basic of any candle. As you can see this information anywhere on the Google, on YouTube videos, but it's very important to understand what are these candles are, what different wicks mean, and how a candle is actually formed, right? So there are upper wicks, there are lower wicks, which indicates the higher price action or the lower price action respectively. Further, you have a body and body color, which indicates buying or selling. You also have open price and closing price. So depending upon what kind of candle it is, you actually get to see whether it's a buying candle or a selling candle, and based on that, open and close changes, right? So this is very basic of a typical candle. Uh, when we are talking about candles, let us move a step ahead and discuss what are there are only two type of candles, regardless of whatever kind of chart you see. There are only two type of candles. At least that is what my understanding is. There are trending candles and there are non-trending candles. When I say there is a trending candle, it basically tells me that okay, here is a trend change, and the following candles are going to be our non-trending candles, which are basically going to follow the trend which is set by the trending candle. Let us look at that from one of the charts. Let's see what. I'll just go. Pardon me if my computer is little slow. Uh, so let's look at this. Okay, so this is Majesco Auto 9 months daily candlestick. Okay. slow. No, let's go to another one. Let's look at the cursor paints. Okay. Right. Okay, perfect. Let me change the time frame so that you guys can see it a little bit better. Okay, so let me highlight some of the trending candles here. Okay. 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 There's the one. And here is the one. Okay. So how do you basically identify whether candle is a trending candle or not? So ideally what happens is if the previous candle is a sell candle and the second candle is a large candle with relatively smaller lower wick. Okay. So if you look at this candle, the lower wick is small. Here it's okay. Here again it's probably small, not very large wick, like these. So this wick is not that long. Same is here and same is here. Here you don't have a wick at all, right? So what these candles tells us, these are all trending candles. Okay. So whenever there is a such candle here, is anybody controlling the screen?
No.
Because there is this red line which has come up here on the screen. I don't know why. Anyways, so so there is one thumb rule to identify a trending candle. Okay, so trending candle, if you are actually trying to find a buying trending candle, the previous candle should be red candle. That means should be the sell candle, right? So if you look at all these trending candles, you will see that price has either continued its upward momentum or it has reversed completely from, it has changed from selling to the buying. So at this first candle, exactly the same has happened. Stock moved from 245 odd level to 275, 280. Here also again 240 to again 300, approximately 300. We had a little bit of accumulation here. This was actually an accumulation. Okay, and if you notice, there is one technique to identify whether accumulation is going to result into a breakout or a breakdown. Okay, so let's say if you calculate these candles, the accumulation candles, there is 1, 2, 3, 4, 5, right? There are 5 candles. If you see the higher wicks, the higher side wicks are relatively very small compared to the downside wicks, right? So if that is the case, in general, you can determine that this accumulation is most probably is going to get converted into a breakout. Again, this is not a sure shot method, but this is one of the methods that you can follow, right? So these are all trending candles, as I explained earlier. The follow-up candle, let's say for example this candle, right? This candle is not a trending candle, even though it's a buying candle, but it is following up a trending candle here, so it's a non-trending candle. Same goes with this candle. Even though it's a very large candle, this is not a trending candle, it's a non-trending candle. Okay, so we will use this chart further in our points as well. Let us now go back. Okay, so as I said, there are only 2 candles that one needs to remember. There is one trending candle, there is one non-trending candle. That is it. Okay. This is probably one of the most important slides that I wanted to show in this session. When I was speaking about structure, a structure of the chart and the historical price action is and should be the first thing that you should look at when you're opening any chart for that matter. Okay, so let us look at another chart, any chart for that matter. Let us say Reliance. Okay, so in order to determine a structure of a chart, you start from the current market price and you go to your left. Okay, that is how you actually tend to find what is the structure of this particular chart. When you are going to the left of a particular chart, what you can do is go and determine one of the swing highs. Okay, so let's say this is this is the level from where it actually rallied up from, let's say, 1,000 rupees to 1,250, right? So let me just simply mark this level here. Okay, okay, this one. Followed by that, it actually came approximately till this level. So I'm now marking what is the swing low and what is the swing high. Okay. So I'm actually you can take any candle for that matter to determine the supports and resistances and the structure of a chart for that matter. Okay. So this is again a 2-year weekly chart. So I will discuss about time frame a little bit later. But if you see, this is a swing low and this is a swing high. Now let us do one thing. Let us go to the daily chart for the sake of entry and exits, right? So let's start marking what are the different levels that we immediately see. Okay, so this is the immediate support level that I see. Then let us start marking what is another level. Okay, and this followed by approximate. These level are all approximate. Okay, I'm not ensuring that line has to touch 3 candles and so on. So these are some of the rules that trader usually follow. I'm just showing the average levels here. Okay, so if you now when you are looking at the structure of a chart and you can mark all the level here, you know what are the levels to get in, what are the levels to get out. So if you see, uh, this rally started from this point onward, and it went up till, let's say, 1260. It came and it broke this support for a while, but nonetheless, if you see, there is another one here. So it exactly, I broke this, but it respected this level and it rallied again. Okay. From there, it came back again, but almost 2-3 times it has respected this level. So approximately 1210 is the level on Reliance where one can blindly enter. Okay. So this is the level from it again rallied all the way till 1400, where it again found a resistance. So there is a very, very strong resistance at 400, 1410, 1400 levels. From there, it started falling down again, and approximately it has come to 1220. So near about it has come to that level and has rallied again. So if you see, now it has respected this level. Okay. So see, this is 1, this is 2, this is 3. So almost 3 times this level is now respected. So 1300 is the level to watch out for if you are a very, very short term trader or you are a short term investor who are looking to maximize 10% or 8% gains and just get out. But if you are an investor, then probably you should wait for 1260 levels. Okay, so this is what I was talking about: structure and support and resistances. So only when you understand the structure of a chart can you understand what are the different support levels, what are the different resistances levels. There is another thing that you can do, but I would not recommend that unless you understand and unless you get to know how to plot support and resistances, is the Fibonacci retracement. Okay, so let's say if I draw from swing low to swing high, okay, you will see that there are a lot of Fibonacci retracements level which are actually matching our support and resistances nearly. Okay, so what you can do is, if you are not able to identify, let's say, support and resistance immediately when you are starting to look at the charts, what you can do is you can find what is the swing low recently and what is the swing high recently, and you can simply plot Fibonacci retracements level and you can see what actually works. There is a trick though. Sometimes, rather most of the time, what happens is, people say, okay, stock is going to reverse from 61.8% of the Fibonacci retracement level. But if you see this, it has actually broken that level. It has reversed only from 38.2. Okay. So these kind of whipsaws you will not be able to avoid if you are using Fibonacci standalone. So I don't recommend to use this. This is only for those who already know how to plot support and resistances, and based on that determine the entry and exit levels. Okay. We already discussed about structure, support, and resistances. There is important thing that is to understand here is once a support is once a resistance is crossed, it becomes a support. Okay, for example, this level here, it was a resistance earlier, it was crossed, it was retested, and then it rallied again. But after that, for almost 3-4 times, that level was respected. So the resistance which was earlier is now a support for the future price movements. Okay, what you can do if you are an investor. So let us discuss about time frame now. So if you are a short-term investor who is looking to invest for 3 months or 6 months, you can actually select this period to 9 months and daily, and then you can plot your support and resistances. But let's say you are looking to deploy a very large uh, surplus into a stock. Let's say now let's go and see Info Edge for that matter. Okay, it should be Naukri. Oh, what happened? Hello. Hello.